Hello there, it's David here from Dingle Lane, and today I'm just going to give you a whistle-stop tour of the range of funding and financing options that are open to you, or potentially open to you, I really should say, because some of them might not be appropriate for you. What I'm not going to do is make any recommendations. I'm not going to run through the pros and cons of each of the different forms of financing that are available to you, and there are lots of pros and cons of every form of financing. But what I'm going to do is just give you a quick whistle-stop tour through the major sources of funding and financing so that you can at least think about that might be useful or relevant to me. The important thing, of course, is if you're looking to gain financing, if you're looking to develop your business, have a chat to your accountant. They're great people for this sort of thing. We know your business, we know the range of options that are available to you, and we can actually help you find the most appropriate form of financing that's right for you, for what your objectives are for your business, for where you want to go, and for what you want to achieve. That said, lecture over, David. I'm now going to just run through these for you, and you can have a think about them. First and foremost, of course, grants. Lovely. Don't involve repayment. And it's just money given to you. Get on with it. Thank you very much. Recently, of course, the government has given out a certain amount of money for coronavirus grants for small businesses with rateable premises in various sectors. The grants ranging from £3,000 to £25,000. Very nice, very helpful, not necessarily enough, and everyone always has a moan about what's available, but it's a start. Those aren't the only forms of grants that are available, though. There are a whole raft of grant schemes in various specific sectors designed to help you invest and develop in certain kinds of area. For instance, in terms of putting IT in place, there are some grants available for IT investment. Most notably, environmental projects. If you're looking to put in place better environmental management, looking into put into place renewable energy sources, things like that, there are grants available. Now, those won't, of course, cover the full cost of putting those things in, but they are designed to make a significant contribution called match funding. You put in an amount, the grant matches that funding or a certain element of that funding, and in effect spreads your money further, allows you to go for a more efficient, a bigger project than you might otherwise afford on your own, and then therefore make a much bigger impact on whatever it is you're trying to do. It's like usually an environmental project of some sort, renewable energy, that kind of thing. But again, there are portals out there run by the government, run by your local enterprise agencies, things like that, that can help you find and identify what grants are available, what they're for, what the conditions are, and so on and so forth, and help you apply for those. Can be really useful ways of making your money go further. Loans, of course, everyone understands loans. The most common one, of course, being the overdraft. Great short-term finance. Of course, repayable on demand, so not a very secure, not a very stable form. And of course, the costs are, well, they were, before coronavirus got in the way, they were actually going to go up, the costs of an overdraft, from the 1st of April this year. Many banks have put off the increased charges with that, but, you know, they're a very flexible form of financing for a short period of time. More stable, people use bank loans. Of course, you have to apply for them. You have to have a certain credit rating. You have to have a trading history. The bank has to know what you're using it for, and they often require you to actually come back to them and report on how you're doing, share your management accounts with them, and so on and so forth. But you get a certain amount of money in, and you know exactly how much it's going out for, and it's for a fixed period of time. Really useful form of financing if you can get one. Peer-to-peer lending has become more common in recent years. That's where businesses lend to other businesses. There are a number of online platforms that help facilitate that. And in effect, businesses with surplus cash invest, much like a bank. They invest into your business. You pay them back with interest. Thank you very much. Can be a useful way of getting a certain amount of financing. And then, of course, there are a range of government-backed schemes, usually run by the commercial lenders, but with support from the government to make them more readily available to businesses without such a strong credit rating or without such strong business fundamentals. Something to think about for people who are looking at starting a business, there is the Startup Loan Scheme. This is a cracking little scheme where loans of up to £25,000 are available, government-backed, 6% fixed interest over 1 to 5 years, and you get 12 months worth of mentoring with it. So you get a more experienced business person sitting down with you and spending some time with you on a regular basis, just helping you get your business in place and helping you get your ideas together. Really, really useful. Never pass up on good business coaching. Other business schemes that are government-backed schemes that are available, of course, the CBILS is most commonly aware of at the moment. The Coronavirus Business Interruption Loan Scheme had its range of problems, but the government is trying to encourage the banks to actually dole out some of this money that they've made available, government-backed. So it, in theory, means that there is much less risk to the bank there. Export financing, if you're looking to expand into export areas, again, there are government-backed export financing schemes available where they will support your selling overseas and make it easier to access funding to make that happen. Really, really useful. Grants and loans aren't the only way in which you can make some money or get some cash into your business in the short or medium term. Very, very common, and something that you might want to look at, is asset financing. So using assets to finance or to get money. Of course, many of you will have come across this with purchasing your vehicles. Hire purchase used to be really, really common. Basically, you own the asset, you own typically a vehicle or whatever, but it could be anything, it could be any piece of equipment. And then you pay the HP company a amount of money every month for however many years, and then, at the end, thank you very much, the asset's yours and you paid for it. Spreads the cost of the asset over a period of time with a rate of interest. Bit like a loan, but it's specifically related to the asset that you're buying. Really flexible, really useful. More common recently for people buying cars, but very common in the business world for many years for any form of equipment, has been equipment leasing. This is where the lender buys the asset, so you don't own the asset. The leasing company owns the asset and they lend it to you through their lease. You pay to borrow the equipment off of them. You don't own it. Typically a short term, couple of years. You don't own the asset. At the end of the lease period, either you can carry on leasing it from the company, or you go and hand it back and go and lease another piece of equipment, or you can pay them a lump sum of money and buy the asset from the leasing company at the end of that lease period. Again, not the only type of lease that's available. Finance or capital leases are available. These are sort of part way between hire purchase and equipment lease, and they're typically designed as a lease to last the entire life or most of the asset's life. So that's where you're buying a piece of equipment that you want to use in your business. It's a permanent piece of kit that you're going to be using all day, every day, thank you very much, until the equipment dies. But you don't necessarily want to buy it outright up front. Now, a number of my printing clients, for instance, use this for their big printing presses. Frighteningly expensive, some of these pieces of kit, and really cracking, really great pieces of kit. They're going to be used throughout the asset's life. They're a piece of kit the company would want to go and buy, but doesn't necessarily want to spend £250,000, £300,000 on this piece of kit straight up front. So what do? They get a finance or a capital lease. The leasing company buys it, and you basically rent it for the rest of the asset's life. It spreads out the cost, means you've got the cash flow advantages of not churning that huge amount of money out up front. So you can be looking at the opportunity costs of, if you've got the cash, do you want to just spend it and buy the kit? Or actually are there other things you can be using the cash for, and you can make more money by using cash doing something else, but you can still get the kit. Really, really useful for long-term assets purchase. At the other end of the spectrum, you have operating leases or contract hire, which is basically a rental agreement in the short term. The leasing company owns the asset, the leasing company maintains the asset, and effectively you just rent it from them for short periods of time. Again, very common with trucks, with vans, things like that. Great way of getting access to pieces of equipment in the short term. So there's those. Brilliant. The thing is, of course, leasing is not just appropriate necessarily for new kit. or for kit you just want to hire for a short period of time. There is something called asset refinancing. In other words, you already own a piece of kit. You can use that as a way of getting finance into your business. In effect, it's like getting a bank loan secured on that particular asset. So be it a building, a piece of equipment, something like that. Really, really useful. But as I say, means that it's secured against the asset. So if you don't keep up the repayments, they come and take that asset away. But a great way of getting financing in and using the equipment you've already got in your business to generate some cash flow. Two other ones always worth mentioning: factoring and invoice discounting. Asset financing doesn't just involve the physical assets of your business. The sales you have made, your debtors ledger, your accounts receivables are an asset of your business. People owe you money, that is money of a form. Just needs to be translated into cash at some point. And you can use that to raise financing as well. Factoring involves you basically selling your accounts receivables, your invoices, to a third party called the factor at a discount. It's not a loan. The factor buys the right to collect on the invoice, and typically you receive something like 75 to 80% of the value of the invoice up front. Great for cash flow. The remainder, less the factor's discount, which is typically 6 to 8%, when the customer actually pays. Now, because factors are basically extending credits to your customers, it's their credit rating that matters much more than yours. And so you can sometimes find that as a business, if you've got really credit-worthy customers, you may well find that you can get factoring finance where you can't necessarily get bank loans because the factor is looking to lend you the cash on the basis of the creditworthiness of your customers, because they're going to be chasing your customers and getting the money off them. Okay, so really useful. The factors take on the responsibility for getting payments. They manage your credit control. They manage processing the invoice payment. So they take a lot of that weight away from you. And in return, they get their fee of 6 to 8%. Can be a very useful way of getting immediate cash flow into your business and saves you having to worry about doing your credit control. They do it all for you. Cracking stuff. Has its downsides as well, but it's something to think about. Similar to financing, but slightly different, something called invoice discounting. Basically, you still get a chunk of money up front, and then when the invoice gets paid, the factor takes their, or the invoice discounter rather, takes their fee, but you maintain responsibility for your sales ledger. You remain responsible for payment chasing. You remain responsible for invoice processing, but the discounter is in effect giving you a loan against the value of those invoices. You then, of course, have to do regular reporting based on your chasing of those debts, on what's being paid, what isn't, what's turning into bad debts, and so on, and that influences the amount of money you get from month to month. But again, it's a different way of using your invoices as a way of generating cash flow now, where perhaps you might have to wait 30, 60, 120 days for your customers to actually pay you. So again, can be a really useful way of getting financing into your business. That's sort of grants, loans, financing, debt-based financing. There is, of course, the option for equity financing for your business. So in other words, selling a chunk of your business to somebody else, selling shares in your business to somebody else. They then, of course, have part ownership, and so will want an amount of involvement in your business. They will want dividends, of course. They will want income on the back of their investment, but it's a way of getting finance. And again, here there are a whole range of different ways in which you can get money for your business. You can actually get equity crowdfunding now. There are platforms that help you crowdsource investors to put in smaller amounts and build up the amount of investment you need to sell that particular chunk of the business. There are private equity investors, really useful private equity people. These guys typically want to buy a larger controlling stake in your business. So great if you're looking to exit the business as a way of selling your business on. So you tend to need to be a mature business, a growing business, a profitable business. But if you're looking for somewhere between 10 and 50 million pounds, that can be quite a useful way of getting financing in. The opposite end of the spectrum, if you're looking for investment of between £15,000 and £500,000, an angel investor might be useful. Typically, like looking at early stage businesses, these are people who take a fairly active interest in your business, but come along and act like your guardian angel, if you like. And as I say, help fund get you off your feet and ongoing, can be really useful. Venture capital. They like businesses particularly with high growth potential. If you're looking for over £1 million worth of finance, venture capital can be a way to go forward. There are tax incentives for people to invest in venture capital. So again, it is something that potentially for bigger businesses is a useful source of finance. There is corporate venture capital. This is where you don't necessarily go to a venture capital trust, but where a bigger company will buy a share of your business in exchange for shares. Again, you tend to find that for corporate venture capital, it tends to be earlier stage businesses involved there, typically looking for £1 million plus worth of investment. Can be really useful. And of course, there is expansion capital, people who specialize in expansion capital, expansion equity. Again, for growing companies, for expansion. Typically turning over between 5 and 50 million quid and looking for an investment of somewhere between 2 and 20 million pounds. Really good sources of finance. Again, you're giving up control. There are greater reporting requirements. Your account system have to be fairly strong, so on and so forth. But as you can see from this list that I've just run through, there is a whole raft of opportunity available to you. Don't just think about the standard, oh, do I need to go to the bank and get a loan? Oh, can I just break into my overdraft and extend my overdraft limit? Depending on what you do, what your objectives are, and what you're trying to achieve, there may well be far more suitable forms of financing available to help you achieve your business goals. Have a chat to your accountant, come and have a chat to me, talk to whoever. But with someone who understands your business can actually help you get the right financing solution in the most cost-effective way to help you achieve your objectives in the most effective and quickest way possible. Hope that's been useful, and catch you later. This is David Nicol from Dingle Lane. Take care. Thanks. Bye.